Good night. All right. Here we go. So we fell a little bit below the market maker's expected move for the day, or the combined expected move. Um, just a fraction, about $1 below it. So almost right at it. A little bit of mean reversion there into the end of the day. This is obviously a little bit bearish. We picked up about 1.62% on VX. VIX turning up about 4%, and 3-month VIX up 2.8%. So we're getting a little bit of unpinning and volatility. This lower close, obviously, and yesterday's higher close are going to start to push um, HV up. And that's what we've been looking for, right? That HV, if we've been paying attention to what I've been saying about vol, we want to see that HV10 on the front side move up around 8 or 9. And then vol can start unpinning a little bit. And if vol does unpin, it's a very, very direct path back to where, the MM is not losing money anymore back at Vega neutral, which is around 6,600 right now. And then, where the MM starts to make quite a lot of money, which would be under gamma neutral here on the weekly. We've definitely seen a bit of risk off if that continues into tomorrow and, well, into tonight with the Vixpiration and then into tomorrow morning. I think it's pretty possible that we open up a test a bit further to the downside, possibly even going back to that like 65.08 technical level. Maybe not by end of week, but maybe before the end of the month. We'll take a look at that in a second. Dollar kind of flat on the day, not too much there, but yields at the top end of the curve pulling back a little bit. Correlation broke down most of the day, turned around into close. Not a very substantial amount, obviously. Commodities up, mostly on a big move in oil. But gold's continuing up towards 3,800. Silver flat on the day. Copper up. And some of the agriculturals bouncing back. Biggest loser today was NQ with a 63-point drop. And then Russell, Dow, probably the most stable. S&P down 53 points. BTC lost a little bit of ground. So did F. So, yeah, we might be seeing a little bit of risk off. We're seeing bond futures move up. Yeah, yeah, I think we might be. Bond volatility has been picking up for a couple days. Correlation on the 3-month rising alongside that. We definitely want to see correlation on the 3-month pick up quite a lot bit more before we see any significant bond volatility. But leverage on the top end of the carry trade now dropping, in line with the drop that we already saw on the front end of the carry. 10 2-year spread is pretty stable, but the forward yield on volatility is moving more positive now at negative 8.9%, which is about 2% up from yesterday, and about almost 10% up from where we were last Friday. So pretty significant move in long volatility demand. We're seeing a little bit of out of the money put buying. Or puts being bought to close either way. So some tail risk hedging going on there. Breadth just really never caught up. The 20-day mover's been staying pretty well below the 200-day moving average. Obviously, concentration's still really high, but the majority of the index starting to fall, and after today will fall probably a little bit south of its 20-day moving average. Fed fund futures moved up a little bit further out, but fairly flat on the January contract. Still pricing in slightly over one rate cut there, with not quite, or a little over 2 into March and a little over 3 into June. Um, little bit of inversion in the 10-2, down 4.43%. And correlation with VIX and cash VIX, another move back towards positive correlation today, with the move up in volatility. Obviously, VX topped out around 20, so this was probably a little bit better before close. So there's still some compression on volatility because they seem to short it throughout the day. But this is negative 29.67% from negative 32 yesterday. So that positive correlation's still picking up. And as it turns more and more positive, we're likely to see more and more demand for long volatility. So, as people arbitrage that. So yeah, and when that does finally turn back towards positive correlation, we can probably see a fairly large move in volatility. Here out on the out on the daily, we still haven't lost the local trend, but we did reject off that new all-time high, which we set this morning. I believe is slight. This morning was slightly higher, 66.9952. Yeah, we never did hit my upside target of 67.02, but close enough. This hasn't quite failed the yesterday's low, which was 66.48. Our low of the day was slightly below that, but we closed above it. So a slight bounce into close. I'd be looking for the next test around 66.35 ish to the downside. If we fail that trend, we're looking at 6600. 6600 is probably where we would confirm a failure. And then we'd be targeting the EMA 30 down at like 6615 or the August high back at 6508. So that little range right there, and a retest of the longer term trend from 2022. At which point volatility would start to pick up quite a lot. So that's where this leg down could go. I would still be very cautious, especially with GDP data and everything at the end of the week. That and PCE and GDP data at the end of the week, that we could find support pretty much anywhere in this range, and any support found before a failure of the EMA 30 probably bullish again. Might not push back to as high of a high, but yeah, we'll probably push back pretty strongly. Today, another big day of losers, kind of across the board. Except today, instead of yesterday, it actually did hit tech. Nvidia down 2.82%, Oracle down 4.36%, Amazon down 3.04%, and Tesla pulling back about 2%. I don't think any of these losses are really substantial enough yet to show any sector rotation, but we do see some interest in oil, utilities, health services. Financials are kind of a mixed bag, but most of the big ones losers. Health tech still losing. So I don't think we're seeing a lot of rotation, but we're definitely just seeing a lot of selling in tech. Um, NQ is pretty massively overbought, so I'm not really surprised here. However, once that normalizes a bit, if we go look at that kind of indication here, once this kind of normalizes a bit and gets closer to trend, it may not continue to fail. So I would at least watch out for that, because it may be things may still be bullish. We don't have anything significant enough on the macro side to justify a big pullback. Um, but a small one. Maybe we could lose like 2 or 3% from here. That'd be cool. Nice spike in vol, and then another chance to go along the bottom. Let's see how MU earnings look. Yeah, that'll be interesting. Have they printed the tape yet? Looks like MU's up a bit in after hours, 3%, 3.6%. I really wish I hadn't sold this back at 127, but whatever. When you think of big pullbacks, do you think of TLT? So I shorted TLT after the Fed decision, and then I got out of it like 2 days ago. Sometimes it depends on like when macro data comes in, yes, or price data. So generally I'll play TLT around Fed decisions, or I'll play it around inflation prints. Sometimes like import export prices. If I think there's going to be like a bigger surprise. YOLO puts, what a YOLO puts, but put spreads are still fairly good here, especially if we get into like a more pro-cyclical market maker environment. Tomorrow flat could be, yeah, that's possible. I'd like to see us drop more, but without data, I don't know. We have a 5-year auction tomorrow. It's not that bad of a day. It's just not stacked with data like Thursday. We could get some like negative interest in the overnight from like the German data around like 4 a.m. I think there's like a seven year bond auction, but if I'm not mistaken, Germany has like its IFO conditions prints, which are kind of like their economic mm, index. And I think those are expected to improve. Foreign stocks have been fairly attractive, especially with S&P valuations as high as they are. I just blinked. Did I miss it? No. Oh, no. I don't think so. No Fed speakers during the day tomorrow. But we do have new home sales. New home sales might not be that good either. It's for they're reporting August, so yeah, August was kind of shitty. I sold some 66.50, 66.65 calls and made $850. Was that a safer bet than straight puts? Since I only put up 90 cents a contract, we bottomed out on like Gamma at 45. I would have said the safest play would have been like in the money call side debit spreads at the low, or put selling at like the 40 and 45 strike in the last like couple hours of the day. Not that what you did was bad, but I'm assuming you did it fairly late in the day, which is kind of risky. If Bulls hadn't, gotten fucked at the 60 strike, they could have kept pushing higher. Like there was a very good chance once they broke out above 60 that they could push for 65 or 70 into close. About 11. Well, okay, that's better. Did you close them early? Yeah, that's always an option. In the money spreads are really useful. Especially if you're, trading specific price targets and not trying to scalp. They can be a great way to reduce risk while still maintaining exposure to the price target you want. Okay, good. Yeah, that sounds nice. When financial freedom, when you stop losing money on dumb shit, you know what I'm talking about. Yeah, they would have made you more, but on more risk. I mean, that's the sacrifice, right? Lower risk, lower returns. They go hand in hand. All right, guys. Thank you so much. I hope you all enjoy your night, and I will see you later. Peace.